the mortgage in plain language. You know, instead of all these complex documents, you know, give me some plain language documents that I can read and I can understand. Guidelines that establish every borrower has the means to repay his or her loan. Again, you know, is this loan suitable? Do folks have the means to pay the loan back? Rescue loan programs and loan modifications to existing borrowers and subprime loans. I've looked at some subprime loans. In fact, my bank in particular are looking at ways of working with our member banks to participate maybe in a rescue loan or two. We're looking for modifications to our regulation to be able to help with this process as well. But they're difficult to do because in some cases, the underwriting restrictions on them are more stringent than the original loan the person got. So some of these rescue loans aren't taking off as they should. And clearly, Josh talked a lot about sort of the federal and state legislation, Barney Frank's bill, Senator Don's bill. I think they both do a great job of addressing, particularly, asset liability and maybe, you know, holding Wall Street accountable for providing all the money for some of these things that happen. Is that next slide, please? And here are some of the things that I see on the administration level. Obviously, folks have heard about Project Lifeline, which is kind of a hotline that you can call, or actually in this case, I'm sorry, this would basically kind of give folks a 30-day stay. If they were in the process of being foreclosed, they get an additional 30 days to try to see if they can work out a deal, a loan modification, make a payment. A lot has been talked about, you know, sort of freezing the interest rates on some of these subprime loans, particularly the adjustables. I know Sheila Bair was behind this initiative to sort of just say, hey, you know, if you've got a 7.5% rate, we're going to freeze it now. We're not going to let you get the adjustment. We're going to work and see if we can get you a refinance before it adjusts. You have the Hope Hotline, which, from what I understand, is taking about 30,000 to 40,000 calls a day. Their goal is to sort of group and triage borrowers and put them into certain buckets. They clearly, you know, they've been overrun by telephone calls. And then FHA Secure, which again is a limited response, but it would replace costly subprime mortgages with, you know, guaranteed, you know, sort of federally guaranteed fixed rate mortgages. Afraid of the bailout. And I read a lot about sort of, you know, are we bailing, should we be bailing out lenders? Should we be bailing out homeowners? You know, so I think that's part of the difficulty in trying to figure out what solution will work is the government doesn't really want to bail out bad actors. You know, if people are making bad loans, it's not the government's job to bail that person out. But at the same time, you want to help the homeowners. So I think there needs to be a balanced approach to bailing folks out. That's all I got.
I'm familiar with neighborhood housing services and what it's all about. And my executive director has been well entrenched in this community, Jim Paley, for the last 27, 28 years. I'm here to talk about next steps. And I'm speaking, you know, in terms of a local housing counseling agency. So. I'm going to say my colleagues have done an excellent job actually giving you guys a great overview of the I almost want to say subprime, but subprime lending crisis. And, you know, where we are looking at it from a regional, a national, and a local perspective. When we talk about why do we need, when I talk about next steps, I'm talking about foreclosure intervention workshops for the community. And if you ask the question, why do we need these foreclosure intervention workshops? I think it's very important when you look at this statistic right here that was recently captured in a Freddie Mac survey from January 31st, 2008 in CNNmoney.com that, I mean, it's startling. 57% of late-paying borrowers are unaware of the different alternatives they have out there. And even though that's down from 2005 when it was 60%, I mean 57% is still a very high statistic right there. Next slide. Now, and also when we take a look at this same survey, when we look at who are these borrowers less likely to turn to, it's the financial institution. So when we say, okay, if they're less likely to turn to there, who are they more likely to turn to? And if I ask you that question, I'm sure many of you would say, it would be your inner circle. It would be your family, it would be your friends, it would be your religious institutions, your media, television, radio, as well as the internet. Next slide. So I always like to say, what is the purpose? Whenever we set up a workshop, there's that purpose, process, payoff thing. So what's the purpose? And it's really to provide the at-risk borrowers with information, and I like to break it down into 4 key areas. First of all, obviously, we want to talk about the possible options and solutions that they have, and I'll get into more detail on that. We want to let them know who the local housing counseling agencies are in their area. If they need to talk to someone and they need help, they need someone to talk on their behalf to the lender servicer. We want to talk specifically about avoiding other foreclosure scams that are out there, and I'll get into more detail about that. And then also, one of the things that we want to come out of these intervention workshops is that, we want it to be a referral bank. Many of you in this room we work with and provide services. We want to make sure that people know all of the local, regional, and national services that can assist them. Next slide. So when they ask the question, what are my options? What are my solutions? And I know that Ken started to actually define some of these things. I think first thing you see up there is a repayment plan. And a lot of times people read the articles that say, gosh, a lot of these lender servicers are really trying to extend themselves to people. They're offering them these repayment plans, and there's this high percentage of repayment plans that are being broken. But I think people need to understand that a lot of times when people are calling their lender servicer is acting like a collector. And basically they just want you to bring that loan current. So if I'm having trouble making a $2,000 a month payment, and I'm behind 3 months, and my lender servicer says, okay, I'll put you in a repayment plan, and now you'll be paying $2,800 for the next 12 months. Now, does that make sense? But what happens, and a lot of the clients that come in to see us say, it's that fear factor. I'm afraid I'm going to lose my house. I'm afraid this is my only option. I don't know about the other options, so I don't know to ask about them. So I automatically just say, okay, I'll take it. And I'm figuring that there's some way I'm going to come up with this $2,800. So that's why you have so many broken repayment plans. But a lot of times the lender servicers, as I said, that are acting like collectors, they're not trying to offer you workout solutions. They're not talking about modifications or forbearance plans or refinance. And so, this is one of the reasons why we need to have these foreclosure intervention workshops. Next slide, please. How do I find a reputable counseling agency? I think that's very important. And just like in pre-purchase counseling, when we review with people, when they're talking about how do I find a home inspector, how do I find a realtor, and I'm always trying to tell people these are the questions that you should be asking. Same question, is the agency HUD approved? Obviously, they can go up on the HUD website to get that information. Looking at, is it accredited? Does it have a track record? Is it community presence? Are there any complaints filed? These are just this is some of the information that we provide to people who attend those workshops. Next slide. And, some of the nationally recognized government entities and counseling intermediaries, which I know everyone in this room are very familiar with, all of these different organizations. Next slide. Now, when we talk about that fact of avoiding foreclosure scams, obviously there are people out there who are just biting at the bit, looking forward to taking advantage of people when they're at a low position. So when we talk about rescue schemes, or equity angels out there that offer you to sign over the property and that they'll pay the mortgage, and if there's any equity in the property, what they're doing is skimming that equity. They're actually not paying the mortgage, and next thing, that person who signed over their property, they're realizing that this property has been foreclosed upon because the equity angel is not paying. So, and the unsolicited loan approvals that people are beginning to receive, and once again, the high-risk settings, and that's always what I call when someone jumps from the frying pan into the fire. I'm already behind, and it looks like I can get this, and if I really analyze it, this is going to put me in an even worse position. And when we talk about phony counseling schemes, and they're out there, and they're very good. I mean, a lot of the literature they send out, it fools me. I remember one client had brought something in, and it looked very official because it had the little fair housing symbol and things like that, and they're thinking, this is legitimate, and they're saying, okay, for $1,500, for $2,000, we'll help you. We'll get your loan curve. We'll work with your lender servicer, and they don't end up working with a lender servicer. So it's very important that people are aware of the scams that are out there. Next slide. This slide I like to call Navigating Life After Foreclosure or Pre-Foreclosure. And I should say navigating life too, even after a modification. Because you're thinking about what do you need to provide people with. Once again, going back to that referral resource bank of the different services that are offered within the community that might assist them. But also, and this is very important, and I think Ken touched about this, it's providing the credit counseling for rebuilding credit. Because many people are going to be in situations because obviously if you're paying your mortgage late, a lot of times you're paying what? Your credit card, your car loans, you're paying everything late. So it's very important that you're talking to people about life after foreclosure. You can start again. So rebuilding the credit, providing the budgeting and the debt management workshops, helping people establish those emergency funds. In fact, I've been reading articles, and I was just talking to Ken about the fact that every day it seems like you have to be on the internet or you have to be reading the newspaper because there's so many changes that are happening because of this every day. But I remember an article recently in USA Today which was saying that some people who realize that they're kind of upside down in their mortgage are saying, okay, I'm going to pay my credit cards, I'm going to pay my loan, my auto loan, and I'm going to forget about the house because I'm using the credit cards now for gas, for groceries. So a lot of people are using credit cards for necessities. But of course, sometimes I think about, and this is in another class, for those of you who know about universal default, which is when the credit card companies, even if you're paying your credit card on time, looks at your credit report and sees you're paying other things late, and what do? They take your interest rate up to that default rate. And so all of that to say that there is going to be that continued need for the budgeting and the debt management classes. Next slide. So, next steps when we talk about the foreclosure intervention workshops. The very first one that we've scheduled is going to be for April 5th, and it's going to be at St. Raphael's. It's going to be from 9:30 a.m. to 11:30 a.m. So when I look at next steps, it's really that 12-month period where we're doing these foreclosure intervention workshops and we're getting the word out to the community. We're getting the word out to the people who need to hear. And you are going to actually hear from 3 families that we've been working with who have been so generous with their time that they've consented to come here and actually share their stories with you briefly. But I think before they share their stories, we're going to hear from our honorable mayor, DeStefano. Okay. Thank you.
I think there's a way we got here, which is in fact was driven by greed and by churning deals. And to me, the ultimate example of this was last night when I got home. And I went into study. I have a phone up there with an answering machine. I had two calls offering me home financing on myself. Nothing has basically slowed down. You know, Americans never really believe these good things end. They think you could still squeeze something out of it. This is something that this moment should be a moment for federal and state regulators to get serious, create sanctions and penalties. People were abusive, and it's a problem. Say 2 other things about New Haven and where we are here. I grew up a block and a half from here in a house that my parents took a mortgage out in 1959 with New Haven Savings Bank, and they repaid the mortgage to, at the end of 30 years, New Haven Savings Bank is well. That is not the world in which we live in. And I also remember that this city is not a city of homeowners. We are 75% renters, and I can't be sure of many things. I would guess 25 years from now, we're going to be 75% rental. That's who we are. But we see some very clear things. We see foreclosures having gone up 80%. When you data point them around the city, you know exactly where you see them. Fairhaven, New Paulville, the Hill, you know most of the mortgage originations have been adjustable rates in the city, and they're all resetting between now and December of 2009. This is not going away. This is a situation that can't be overregulated. Now, as the city thinks about it, and you know, why we should stick to collecting garbage and fire calls and getting into arguments with the governor, that's what we should say, you know? And the reason is we have a huge self-interest in this issue. I mean, most tangibly, I remember 1994 when I came to this current position with the city, there were 1,600 vacant structures. It was driven down every year until through 2006, when we bottomed out at 300. We went up last year for the first time. We went up to 360 or so from 300. First increase now. The city got together a group last fall. Many of the parties that are in community loan, you know, usually group suspects are all here. The law clinic and all of us, NHS. And I do want to say one thing. I was so glad we didn't have the NHS slideshow. I love anyway, with these partners, there are three-legged stool we think we need to do. One is just outreach, and not just someone, everyone in New Haven who has, frankly, made a subprime or an adjustable. Everyone. And we think it needs to be managed as a caseload, number two. It's got to be managed as a caseload. We're a community that's small enough and smart enough to do it. And third, we need an intervention to take back structures that are foreclosed and get them back out at the down at the market. But I think there's a larger issue that this is all connected to, and then I'll stop. Is ultimately redlining still does occur, but it occurs in this way: financial literacy. The fact is, when my parents went to take out their mortgage, when Kathy and I took out our mortgage on our house, it was a much simpler and straightforward world in which we live. The fact is, in so many neighborhoods of this city, and so many places around America, financial literacy is just not taught. And people are absolutely terrified to walk into one of these buildings with these white columns, you know, where no one speaks Spanish too often. No one looks or comes from a place or dresses like a place where this comes from. This is an issue, particularly in a community such as this, where there's such a transient population, right? You know, different kinds of people coming here now. So the fact is, this has to be accompanied by a huge commitment as a community, and ultimately as a state and nation, to financial literacy, not just for home ownership. That at Yale wasn't going to happen. So, you know, you say this again, this is a larger issue of financial literacy. So thanks, you're all great partners in this effort. You're smart little community. I have good feelings we can do this, and I think you ought to have fun for a year on the regular class.
Almost $1,300. I had a very good job, so I was able to pay until November. Then I lost my job. And I have some tenants that help me, but they wouldn't be able to pay the whole thing with that money. So I went to refinancing. Oh, they want $18,000 fee to refinance my house. I'm like, I'm gonna go back to the same place. If you add another, they sent me a paper to sign so they would be able to get money out of my bank account, and they will fix my problem. All the angels that fall. Then I said, you know what? Let me call the credit bureau. I'm gonna find out about you. Then the credit bureau told me about the Connecticut banking, and they sent me the list of the real angels, which is Bridget. She has been a real angel for me, fighting with Countrywide. It has been 3 months. She told me, stop paying this extra payment. Do not stop doing your obligation, which is to pay your mortgage. She never told me to quit. You have to pay. But do not send the extra money, and they will have to help you. Well, guess what? They sent me a letter. In April 1st, my mortgage is going to go back to normal. Is that good or what? Thank you so much, everybody. Thank you, Bridget. I love you.
To tell you about my situation. Well, my mortgage started out at the price of my house, $139,000, and I don't understand now how my mortgage now is $228,000. I did refinance. I didn't get any money. I didn't get anything. I don't even understand the mortgage that I got myself in, but I have a mortgage for $228,000. And I think and praise God. Excuse me, I do use God because that's me. What happened to me? We had foreclosure. It's a foreclosure here, and we couldn't. And I can't pay my mortgage. I would pay in my husband's name, and we have a mortgage. We don't understand it. It's $228,000, and we had we didn't know what to do with our Hartford Sherman Avenue. And I met Bridget. Praise God, I met her. And that's the reason why I'm in my house today. My grandchildren, because I have grandchildren here. I'm not just standing for myself, but I'm standing for many other mothers that I know about. They're losing their home. They don't know what to do. But I think and praise now, working with the lender. My lender is Saxon Mortgage. I don't know if you know about that company, but that's the company that I have. And they're very hard to work with. But Bridget got on the phone, and she helped me to be in my house today. And I thank God for her, and I'll sit down.